Welcome to the Future of Financial Reporting, a question of influence. My name's Kerry-Ann Ross and I'm a Senior Policy Advisor and Reporting Specialist at Chartered Accountants Australia and New Zealand. Joining me today is Wayne Basford. Wayne is the IFRS leader for the Asia Pacific region at BDO. Welcome, Wayne.
Thank you very much.
So Wayne, what's your view of the current financial reporting landscape? What do you think works well and what do you see as some of the challenges?
The current landscape is the most volatile landscape we've been in ever in IFRS. So I lived through transition in 2005. The wave, the tsunami of the three standards that are coming in now are far more complicated, dramatic than anything we've seen in the last 10 years. So it is an interesting landscape, it's a challenging landscape, and the whole financial reporting profession will just be focusing on the implementation of those standards for the next 3 years.
And what have you seen change over the past 10 or so years that Australia and New Zealand have had IFRS? How's the IFRS experience been for you?
IFRS in the last 10 years has got increasingly theoretical and complicated, and definitely better. You've got revenue, we've got a revenue standard that's 350 pages, 360 pages of literature that makes sense, replacing a very simple standard that was 30 pages. So when you're looking at what's happened in the last 10 years, whether it's consolidation, whether it's joint ventures, whether it's financial instruments, hedging, revenue, leases, the standards are definitely better. It'd be very difficult to say they're not, but they are far, far more complicated.
How do we make the standards less complex? Is there a way that we can get a better outcome?
You can never make them less complex. You know, the challenge is we live in a complex world, we live in complex transactions. Very likely the opportunity for Australia is to make them understood and to actually make them usable and practical. Obviously, when you're looking at the standards setting process, it's make sure we interact with the actions of the ISB. So when there are outreaches on 9/15, to make sure that the industry groups, the professional bodies in Australia, the regulators in Australia actually submit responses, talk and interact with the standard setter.
So Wayne, you were Australia's representative on the ISB's Impairment Transition Resource Group, which dealt with everyone's favourite standard, financial instruments. How does influence work at an international level? How do you get 120 countries to agree on impairment?
You don't. So the simple answer is to get 120 countries agreeing, you're never going to please 120 countries. So on one standard, there are extensive exposure drafts, re-exposure drafts, and the standard evolves. There's an amazing amount of outreach on the new standards that have come out. And you can see when the exposure drafts change from ED1 to ED2, you can influence it. Now, whether it's a political group, a lobby group, an industry group, it can be changed. And I'm not convinced Australia, and I'm not convinced it's necessarily good, that you view it as a nationalistic country lobbying group. It's being involved in an industry that makes sense, that in the banking industry this works, in the leasing industry this works. And that's the way to drive it. And the question of influence, obviously, being BDO, being one of the large firms, we influence by being part of a global network rather than having an Australian flag. And if you look across the large firms, there is a strong Australian representative in most of the global teams. Now that gets Australian influence through that channel of influence. Genuinely, when you look at the talent that goes to London, when you look at the talent that goes to Cannon Street, there's a number of Australians that are working on the staff. Now they will take into Cannon Street their Australian views, their ingrained views of how certain transactions should work. So you do get influence that way. The obviously other, trying to get a political bloc is the AOSSG. So can Australia have a voice now? It is a G20 country, but it's only 23 million. And interestingly, it's already adopted IFRS, and it's very likely not threatening to leave IFRS, and it's not threatening to block an IFRS standard. Now, that gives you political weakness as a standalone country compared with the power of Europe, the EU, that could block a standard, could refuse to endorse. Or you're more attractive that if you're being wooed to join the IS club, so Japan or China, is Australia that politically interesting anymore? But maybe as a bloc and trying to get influence through the AOSSG, that may be the way forward.
Now tell me about your desired financial reporting landscape. What would or could that look like?
In terms of could it change, or would I wish it to change a lot? You're never going to have a magic wand and say it's easy. There's no way you can turn back the clock and say I'm going to throw out 4,000 pages of literature and I'm that clever I can write it in 200 pages. The desire is to make it relevant and the communication. Hergewurst has come forward and said one of the main aims for the next 5 years of his term is to improve the communication element. If that's the problem, that there's only a handful of people in the country that actually understands them, we've done something wrong. And there's a whole level of ways to improve it. There is the disclosure initiative. And when you're looking at what Australia can do and has done, arguably some of the examples in the ASX 100 represent some of the world's best practice on how to try and get your accounts readable. The reordering, the indexing, the emphasis. So there is that, can we agree and have a standard approach that there isn't a boilerplate disclosure, that people are trying to get the mentality of actually communicating through their financial report and that people see value through it. I think that's an opportunity, and rather than, oh, you're an accountant, you're a technical accountant, you're the only person that understands it. If I could actually have people ask me questions about numbers in the accounts, that would be a valuable change.
So we've touched a bit on geopolitics in this discussion, and it's quite topical seeing as we've just seen Britain vote to leave the EU. Can you see a situation in future where Australia and New Zealand might leave IFRS?
The argument very likely is it centres a similar argument to Brexit. So when you signed up to the ISB, you lost sovereignty, and you either are willing to accept that you've lost sovereignty and there may be an aspect of it that you disagree with or doesn't suit your national perspective. You've lost that sovereignty. If you have this nationalistic argument, then it's a step backwards. You know, it's a step backwards for the UK. It would be a step backwards for any country that's joined it. The benefits of joining IFRS are extensive. People trust your numbers. You can use your financial report in any exchange in the world. When you look at even the way India has now gone and adopted, India has got 12 carve-outs. Is that a sensible way for India? No, because you're going to end up having to, nobody will really understand Ind AS. They're very, very similar, but you'll be always suspicious of Indian IFRS. Will you be able to lodge an Indian set of accounts on New York, Australia? No, you won't. So if people go backwards, for that country, it will be a serious blow. From a true IFRS perspective, there's obviously only one major jurisdiction that would really be a massive body blow to the IFRS project, and that's the EU. I can't see, particularly because there aren't that many standards on the horizon, would there be a situation, because we've obviously had adoption of the standards by EFRAG, will there be a particular trigger that could cause the EU to depart in the near future? I hopefully can't see that happening.
Thinking about future financial reporting trends, do you see digital financial reporting as playing a big part in our future?
I may be a dinosaur, or I've got serious concerns about digital reporting. I was presenting in Asia a couple of weeks ago, talking on the disclosure initiative to improve the readability of accounts. And one of their excuses or reasons why they're finding it difficult, they've got a very rigid template in order to put the information into digital reports. So the whole idea of having flexibility and understandability, my concern is that the digital template, the taxonomy, etc., will force a very, very detailed, rigid structure. Equally, to be honest, a lot of the improved disclosure that should be coming out of the disclosure initiative is actually more narrative, is actually trying to explain why a transaction worked, why it was the judgments involved in it, and that isn't truly digital in the XBRL tagging side of things. So I'm nervous about where true digital reporting in its current format could actually put us back a step rather than move us forward.
And how about non-IFRS measures of financial performance? We're seeing a lot of companies increasingly use these non-GAAP measures. Is that a good thing?
It's a massive risk that people are reporting numbers. Now, from a typical presenter for the last 30 years, there is a great urge, or if I'm skeptical, to say we will always produce a result. So here is a good result before any bad news, before extraordinary items, before exceptional items, before any debits. And that's the headline number because we want to tell you one number, that's the profit, but we don't necessarily like this year's profit, so we'll adjust this year's profit. Obviously, the financial accounting has tried to block extraordinary, exceptional items, and very likely that's not the right way to go. So if we do need EBITDA, if we do need non-GAAP, recurring, cash, etc., we've got to accept that's what users needs. The users' needs are simplified, correct, accurate highlight numbers, and very likely one of the areas the ISB should be looking at is to actually properly define a non-GAAP measure. So properly looking at the concepts around what would be non-recurring, what would be a cash basis, what would be EBIT, EBITDA, and that highlights people want to read the synopsis of a financial report. They want to read the 5 PowerPoint slides, not the 300 pages. And we can't just live in a world where, as a standard setters, to say we're not interested with what goes on those 5 PowerPoints. From an overall MD&A perspective or operating review, I'm nervous that that's an area that the standard setters should go into. But whether there's an opportunity from an Australian perspective, from an Australian ASX perspective, or from an ASIC perspective, to have and lead the way in best practice in MD&A, I think there's an Australian opportunity there.
Do you have a final message for our viewers on the question of influence?
For influence in IFRS, it's start off with actually understanding how the process works. Do people understand the current agenda, the ISB agenda, where they're doing their research papers, when they are doing a research paper or they are doing outreach, it's to participate in it, to read the papers, to understand the logic. And there's potentially even below that. Obviously, the AASB, which are supporting or trying to support the ISB, have got various projects they're looking at, research projects. It's, if you are particularly interested in a topic, an industry, then it's get it from that route. and feed your opinions up into the AASB, into the ISB, into the industry groups, and you will be listened to, because definitely one of the problems I think both the AASB and definitely the ISB get is people don't talk to them. They are sitting there in Cannon Street wanting to hear as many constituents as they can, and a lot of the times they just don't get the feedback. So it's them not getting the feedback rather than them not asking for the feedback. So work out how the standing setter process works.
Wayne, thank you for sharing your thoughts with us today.
You're very welcome.